Hey guys, Stock Saturday, and it's been a slightly green week for me, which I believe is slightly better than the markets. So I sort of seem to do the exact opposite quite often. Last week I was underperforming in a green market. I'm up about 1.1% this week, compared to minus 0.7% for the S&P. Nasdaq is quite a bit worse, 2.18% down. Really didn't like Friday. We seem to get some bad news from Oracle, sort of delaying their rollout of data centers, sort of due to labour, power, material shortages, and all sorts. Sort of, I think said some sites that they said were going to be ready in 2027 would be pushed back a year, which isn't great at all. So you obviously had a bit of a knock-on effect for some of the stocks that will have equipment going in there. Broadcom had quite a bad day. They also announced earnings, which I'll come to, but yeah, sort of semiconductors and tech and things, that would be having stuff go in those data centers. Obviously, if they're a year delays, then yeah, that's not great for revenue. But yeah, it's been an interesting week. Gold and silver doing pretty well, very well indeed. Silver in particular, mate, breaking new all-time highs. Got to $64 at one point, and has sort of rested at about 62. So yeah, very high. Part of that, of course, may have been from the FOMC and the rate cut. We also got the summary of economic projections. So they've sort of, since September, have had a bit of an adjustment to their long-term figures, and they've sort of pushed GDP up quite a bit, actually. GDP for next year, they're saying 1.8% in September increased to 2.3%. So I think they put this down last quarter, so they're kind of all over the place, but there you go. They put 27 and 28 up 0.1%, and this sort of longer run 1.8%. I don't think you can forecast that far, but they have to put something. They largely left unemployment the same, 4.5% for end of the year, 4.4 next year. They did cut 27 slightly, and they've also cut the inflation expectations ever so slightly. Sort of next year, PCE inflation 2.4% and core PCE 2.5. So if the target is 2%, and they sort of keep saying that they're rigidly sticking to that 2% target, then 2.5% for next year, and then 2.1% 2027. Maybe they see that as sort of slowly bringing it down. Obviously, Jerome Powell's going to be out in 5 months, so maybe he's sort of looking to just calmly have that come down towards 2% and sort of leave without having a recession. It sort of looks like they've got into a little bit of a sticky situation recently, but yeah, they've had to sort of do a little bit of sort of QE. I think I saw printing 40 billion worth of bonds, or sort of buying 40 billion worth of bonds, which they don't call QE, but essentially is. They did leave their interest rate projections exactly the same for the next few years, and yeah, it was sort of fairly even on the dot plot. Obviously, not sure why you have some people sort of different to the current rate on the dot plot since we've had the last meeting. Some people sort of potentially saying that they're going to hike rates before the end of the year. That seems a little bit strange. I guess the lower one is Stephen Moran, but yeah, didn't quite understand. This sort of wide bar here is the current rate of sort of 3.5 to 3.75%, and then you have six people sort of a quarter of a percent above that. Whether they do these predictions before the actual day, don't know. I thought this was part of the actual meeting, so very odd. Next year, of course, is quite a wide band. Some people sort of predicting 1, 2, 3 cuts, and then Stephen Moran, I presume, at 2 to 2.25%. Interestingly, sort of 2027, if that's him, he's projecting higher rates into in 2027, and then this is sort of all largely clustered around the same point where it hasn't been before. So yeah, I think they just got no idea what to make of it. Just a quick report from Hive Digital. They did their monthly production update. Obviously, this sort of is much less of a position than it used to be for me, but I do have some options for including all of next year, January 2027. Sort of one last roll of the dice to see if Hive can pull out all the stops. Basically, I've obviously lost quite a bit of money on them, but yeah, that's options. But they did produce 290 Bitcoin, up 182% from 103 last year. Obviously, they've expanded a hell of a lot. Hash rate peaked at 25.4 exahash for the month, so pretty good. Efficiency is now down to 17.5, which is very good, to be fair, including the sort of Paraguay lower electricity prices. They should be a little bit more profitable, even if they still have some at sort of very expensive. I think 7.5 cent electricity, where sort of everyone else is going for 3 and 4 cents. That does certainly help, and they're still pushing the AI stuff in Canada and I believe Sweden as well. And there is 100 megawatt of capacity in Paraguay to come on next year. So yeah, they're still pushing on, but it really needs Bitcoin prices to push on next year, which I do think it can do. I'm not one for the 4-year cycle. I think that sort of died quite a long while ago with previous halvings. You know, the halving doesn't make anywhere near as much of a difference now, and it sort of basically turned into a macro sort of asset class, sort of risk on. You know, some people see it as risk off digital gold. It's going to, you know, follow macro moves rather than sort of be affected by Bitcoin specific issues, you know, for the most part, I would say. So yeah, I think next year potentially has a good year, and Hive could finally do what I was expecting of it. So as I say, Broadcom announced their fourth quarter results. They're obviously sort of a month behind on their sort of quarters. So fourth quarter is this month, sort of for up to end of October, or yeah, a month ahead, I suppose you could say. And they did this into Oracle, sort of saying that data centers aren't going particularly well, but yeah, numbers all look very, very strong, of course. Semiconductors still doing extremely well. So revenue up 28% from this quarter last year, 18 billion. Very, very nice. Net income, GAAP net income is up 97%. Obviously, they're you know, have been working through the VMware acquisition. So as far as net income goes, it's been a little bit all over the place. Guessing that is starting to work through. We'll see. The sort of non-GAAP, I think, while they're working through acquisitions, is probably the better metric to look at. I know people don't like sort of adjusted stuff, but yeah, I think some of this is worth adjusting for. So yeah, up 39%. Net income 9.7 billion compared to just a touch under 7 is very strong. You've also got cash flow from operations, adjusted EBITDA and free cash flow all up a very, very tight range of, you know, 35% ish, pretty good. And adjusted EBITDA of 12.2 billion is again 67% of revenue, which is very, very strong. They were targeting 60, so continuing to be 67. is good. And semiconductor solutions are increasing from 59% to 61% of revenue. Infrastructure software dropping down to 39 because of their sort of AI specific chips and cards doing a greater proportion of revenue. VMware and things are still doing well, but not growing quite as quickly, I guess. And they give their first quarter, or sort of quarter ending February the 1st. And they give their guidance, first fiscal quarter, it's basically November, December, and January, of 19.1 billion, and 67% adjusted EBITDA. This just sort of seems to be pretty constant now, which is a great figure to be constant. We don't need it to be growing from there, really. But, it'd be, nice if it grew a little bit, but I'm fine with that. 19.1 billion, of course, is up from 18 billion this quarter, and up solidly from, I can't remember what sort of Q1 was previous year, sort of 15 billion or so. It's going to be another 30% or so growth. It's up 5% from the quarter we've just had. So very, very strong. Dividends, they approved a 65-cent cash dividend, which I think is a small increase, so not too bad. Just checking those adjustments to net income as well. Amortization of acquisition-related intangibles, 2.05 billion. So I would sort of agree to knock that out. Stock-based compensation I would leave in because it is an expense. So and then with tax adjustments, not quite sure why we're knocking that much tax. I think they did say there was a bit of one-off tax in this quarter, but yeah, I think that is sort of is what it is. But I would certainly knock out amortization of intangibles because that is non-recurring once this is sort of digested. So yeah, it's a reasonable quarter. And balance sheet is where things are really continuing to do quite well. Cash and cash equivalents up 7 billion, almost $7 billion. So that's very, very nice. Goodwill sort of staying the same. Intangible assets has come down 8 billion as they start to sort of see what's what. This is compared to this quarter last year, so I think I sort of will have reported this anyway. They sort of seem to pick strange quarters sometimes. Sometimes it's 9 months ago, sometimes 6 months ago. Now it's comparing to a year ago. But yeah, not too bad. Long-term debt down from 66 to 61.9. Again, I think this was sort of similar to last quarter. Short-term debt increased to 2 billion. Some of this long-term has become short-term, of course, but yeah, 65 billion between those two, compared to sort of 67 and a half, and cash has obviously increased quite a bit. So yeah, slowly working through all this excessive debt while they're still expanding as well. So looking nice. So on the gold and silver front, we are starting to, unsurprisingly, get more and more acquisitions. The companies have sort of got to spend their money on something, and you can only do sort of so many buybacks and dividends and things. Fresnillo don't exactly have huge amount of debt to pay off relative to sort of the company, market cap and everything. So they've decided to acquire Probe Gold. Not exactly a huge acquisition. This is 560 million US dollars. They bought at a 24% premium, which is always, why the buying company tends to go down a little bit on the day. And yeah, they are the 100% owner of the Novador Gold Project in Quebec. So they're wanting a little bit more, well, a little bit more gold exposure and a little bit more Canada exposure as opposed to having sort of the vast majority in Mexico. So this is basically an asset and future mine company. They don't have anything, it looks like, producing at the moment. They have sort of resource base of 10 million ounces of gold, including 8 million at this main site. It's an advanced gold project which has potential to produce over 200,000 ounces over 10 plus years, which is pretty nice. But obviously, you have to build the mine. So for this sort of total land package and gold, potential, they've paid $560 million. Not a huge acquisition. If this was built and producing sort of 200,000 ounces, then, you'd be paying many multi-billions, I expect. So, yeah, an interesting buy. But this is the real kicker, where sort of other companies are doing, enormous dilutive mergers and acquisitions and things. Fresnillo expects to finance this acquisition entirely with existing cash on the balance sheet, which they have, as of June 30th, $1.8 billion. And, since June, things will have gotten quite a bit better with the higher gold and certainly silver prices. So, yeah, no change to their dividend policy, no change to sort of, can't remember how much sort of buybacks they're doing. I don't think it was a huge amount, but yeah, they've just got cash, go and buy things, and no share dilution. So they'll have to spend money sort of building the mine from the looks of it. But if they can do that from cash flows as well, then you have a 10-year mine with 200,000 ounces of gold, with no change to share count, which is very, very strong. Surprising that they're, maybe not so surprising that they're going after gold a little bit. I was sort of surprised to see Coeur Mining, which were sort of pushing into the silver and trying to make themselves, more of a silver miner, have made their new gold acquisition and, takes them very much into a majority gold miner again. I think they're showing they're going to be 80% revenue gold, which, doesn't really give you that silver push when silver goes up. That'll be more sort of people like Pan American now and Fresnillo, of course, 50 million ounces of silver. But yeah, this seems like great news, and hopefully if, as sort of other miners' balance sheets start improving, we can maybe see a little bit more of this, rather than, we're issuing sort of 30% of our current market cap in shares to acquire, another project. So yeah, I was quite happy with this from Fresnillo. So you had some other economic news aside from the FOMC, sort of old news. September JOLTS job openings were a little bit better than expected, or sort of more openings generally means higher wage inflation. So yeah, potential sort of knock to inflation there. All the FOMC stuff, jobless claims had quite a surprising downturn. Has sort of been in the 1.9 millions for quite a while, and suddenly come back down to 1.838, even if initial claims did go up. They sort of revised the previous week to 192. It sort of hasn't been below 200 for a while, and then it sort of shot up back to 236. But these people are, or some of these people at least, are getting a job, it looks like, because they're not continuing jobless claims. So yeah, that was quite good. UK numbers look appalling. GDP 3 monthly change is now negative 0.1%. So yeah, that's just a sort of continuous line downwards for the past 6 months, it looks like. And that would indicate sort of maybe won't actually be recorded as one, but a sort of mild recession. So portfolio wise, I've actually got a mining 1, 2, 3 on top now. Coeur Mining, KGHM and Fresnillo all sort of top in the charts. Fresnillo doing exceptionally well, sort of did hit 300%. and that's excluding dividends, of course. So very much more than that, including. And yeah, these sort of other, Amazon Applied Materials and things starting to drop back down. Amazon below 40 grand now, and yeah, some of the others sort of not doing quite so well. Have had reasonable amount of dividends. I think CF paid, and sort of a few of these others paid. Had about $800, I think, sort of in the past month. So pretty good, starting to trickle in. ETFs are still sort of chugging along. Haven't really had a lot of dividends from them just yet. They're not all distributing. I think two of these are accumulating. Sort of keep them in the ISA. But yeah, should start to see a little bit of dividend. Things like the Nasdaq, it's a very, very small dividend, but a large holding. So should be nice. They'll go into Trading212, and yeah, the Bitcoin and Ethereum not looking too happy at the moment, but that's hopefully has a good year next year. On the just sort of looking at the options side, so you can see the percentages. Equinox is sort of expanding even more, looking pretty good. 684% in the green now. Hopefully, sort of get some good price action next year. These are January 2027, and I'm expecting them to really have a good year next year. Valentine Mine now sort of contributing, and the Equinox Greenstone Mine sort of pushing basically higher towards their initial targets of I think 330,000 a year. So if they can get close to that next year, and the Valentine Mine goes well, everything else sort of carries on as it was, then I think they will have a really good year. So, potential for this to, to be, I don't know, 250, 300,000 or something by the end of next year. So, fingers crossed. I did buy a little bit of B2 gold. Push this from 750 to 700, to 850 contracts. These were all the January 2028 $10, because sort of thinking they're going to hopefully get over their Mali issues. That seems to be sort of the only thing really holding them back at the moment. They've also, they're reporting lower profits because they've still having to give away part of their gold because of the prepay agreement that expires in June. So after June, they will hopefully get all of their gold to be able to be sold. And I think some people, maybe more sort of retail focused people, still aren't aware of that prepay. So you'll have a sort of sudden spike up in profit that they're not aware of, and it'll be all over the news. And yeah, the Mali issue sort of, I don't know, potentially could be improving. You've sort of got apparently quite an aggressive Russian mercenary operation in there, and sort of, doing a shock and awe type tactics. It's not the nicest thing at all, but I don't know, maybe that sort of improves the situation. They have obviously come out and said that they're not affected at all by all of this activity. So I guess just as the months go on, if nothing significant happens to them, then might have a sort of re-rating of B2. They have said that they're cooperating fully with the government since their new rules. The new mining code, I think, came in sort of late 2023, and they've said since the beginning they've been cooperating with that, and they are very friendly with the government. So don't know, I think this one just needs more time, hence me doing the 2028 options. It gives me all of next year and all of 2027. So yeah, big potential, I think, on B2. Iron has still sort of got until March to run, and needs Bitcoin and sort of the AI to continue. Kua Mining has only got another month, so was hoping for a sort of another push on silver in particular, a little bit on gold. People haven't sort of liked their acquisition of new gold, so it's sort of not helped the timing with me sort of only having a month left, but I think I'll keep them until sort of almost the day they expire, and hopefully sell them around then. And yeah, Hive just obviously looks awful. That's wants a decent gold price next year. Most of this is now my January 2027 options. And Nakamoto is, of course, practically dead. These do run until March, so there's a little bit of potential there. But yeah, overall, I would say looking somewhat promising with potential on the option side, maybe for some explosive upside. So yeah, leave your thoughts in comments below, how you guys are doing, and like and subscribe. See you soon.